The following is an update and technical analysis on silver futures based upon the 240 deep diving as well into the daily and much larger extended zoom out big picture within the monthly interval. And on the 23rd of November 2023, we're trading spot price 23.75 spot price in silver. And I remained how critical this key inflection point was on a key breakout on what I considered a well-defined major reactionary high downtrend line, which is the confluence and correlation to a beautiful, well-defined inverse head and shoulder classic looking bottom. And we popped that level and retraced right amongst that key inflection point, had a whipsaw-like reaction, had a symmetrical triangle formation forming, and I had remained adamant that we were potentially in the beginning stages in a great risk-reward long trade setup to the upside, where it was the foundation of a potential bull flag continuation pattern, and it would remain objective to go long right amongst this key inflection point, setting some stops below, especially this primary downtrend line off the neckline to the inverse head and shoulder bottom, with some additional targets up to the 24.17, 24.41, and a 24.82 price resistance as that third initial target, and that the flagpole would measure perfectly to the reactionary highs, to major reactionary highs of the year up to the top of that trading range. And here's the update. In the entirety of that trade off the back end of that inflection point, and the entirety of that trade is good for an 8.16% big move to the upside. And that is a major key inflection point that we are honing in on the beginning stages, where Friday's market open session were all eyes on Jerome Powell, waiting to see if he would drop a hint to tame the stock market's wild ride after the month of a record-breaking easing. And Powell reassured everyone, suggesting the U.S. is on a smooth path to 2% inflation without major job losses, aka a soft landing, where the market in its excitement interpreted this as a green light for a full-on market melt-up, now thanks to the Fed blackout until December 13th. Potential, I believe, a gold rush for calls have completely ensued, where the chart reveals a relentless surge in open interest between 2,000 and 2,500 an ounce, fueled by growing optimism that rates are gearing up for a much more major decline. As I've stated in that previous video that I had created on the U.S. Treasury yield curve, we are at two major key inflection points within the 10-year and 30-year. Zooming you out to the much larger picture within the daily interval of the spot price of silver futures, and I believe we've reached a critical transitioning point upon this major primary reactionary downtrend line off the May 2021, call it a multi-year major reactionary high downtrend line, and that will be a key inflection point for any long traders and or bull traders to respect heavily at all cost, in correlation of the 382 monthly interval Fibonacci resistance level. And again, that is just some key inflection points to respect, where short sellers, bear traders, they want to defend this key inflection point really at all costs, especially with JP Morgan and the big banks going in to short the metal down to that first target at 25.43 for a 2% drop, down to 24.53 for a 5.7% crash, and then ultimately down to the 23.85 complete backfill of the gap in correlation of the 200-day moving average, called a dual line of transitioning points, for an 8.1% crash to the downside. Long traders, bull traders, and long-term investors want to see a solid green infused candle close breakout above this key inflection point to hone in on and really take that big level out of major price resistance for a much larger move to the upside, as gold breaks new all-time record highs with absolutely no resistance up above. You have the complete transpiring of major momentum indicators just completely churning to the upside in a violet bullish crossover, big breakout to the upside upon its zero line threshold, as well as the relative strength index just churning in a parabolic state to the upside as well. Just major health being poured into these technical momentum indicators based upon that first major 240-minute defense of the symmetrical triangle pattern that transpired well into a bull flag continuation pattern of a violent rip your face off rally to the upside. Zooming you out to the ultra large picture of the monthly interval, and this is what I see here, is a major key inflection point based upon the 2011 reactionary highs, and this is the ultimate level, I believe, for any long-term investors, long-term traders to defend heavily at all costs between short sellers and bear traders, where again the 382 fibs retracement in correlation of the 25.97 price resistance is the utmost key inflection point if and when we take this level out. The last line in the sand, in my opinion, would be a monthly candle close infused breakout above this primary reactionary downtrend line off the 2011 major. Call it a full-blown decade of price resistance. And I believe the line in the sand, long short sellers, bear traders, big banks, institutions will see a panic of short covering, in my opinion, on a prolonged move up to the 30.78, 50% fibs retracement. Ultimately, the 618 at 34.78 and a major target, the 786 fibs for $41. And I believe big inflection points and more so of a parabolic, again, a major short covering, squeeze your face off rally, similar to the 2009 recovery and crash of easing, similar to the 2020 just rip your face rally. These are just prolonged moves into 2016, just huge moves to the upside is the way the nature of the silver volatility, I believe, would just be it's just a huge rush into silver and a gold rush move back up to that 50% fibs retracement and an all-out short covering. Wept by panic, traders rush to slam the emergency exit doors, hastily closing positions in an extreme frenzy.